Hey, everybody. Welcome to the morning market briefing. It's Wednesday, April Fool's Day, 2026. In a classic April Fool's joke, Ben sent us notes at 5:47, and most of them are things he wanted to talk about. Ben, what you got? Got him. Ben's running late. He rented a car for some. We'll find out. We'll get the full scoop when he gets here. But Ben is going to be joining the call, I think. So at some point we'll get to all that. But we'll keep the main thing. And the main thing this morning, guys, I got a text from a friend, a client, a listener to the podcast. And I got to say, big fan of TK.
Ooh. Positive reviews from my own wife as well.
Volunteered. People they're big fans of the Minnesota Miracle Man. So,
I'm glad to hear it.
Yeah, he was like, "What's this guy's deal? He seems like a good fit."
I mean, how many little boys they grew up listening to their heroes on a podcast, and then one day get to join
lived long enough to become the hero.
Shoulder
I think
to
that's
shoulder.
how the quote goes.
They're probably going to make a movie about it.
Yeah.
Yep.
Yeah, definitely. So TK Nation is growing out there. It's good to see.
We're gonna have to come up with a different. There'll be Tomcats, and then there'll be Tomcats with a K, and that'll be for TK.
Yeah, Tom Kitties.
Tom Kitties.
The Tom Kitties. The Tom Kitties are out there. So well done, man. Way to make an impression on people out there. We got a Trump speech coming tonight at 9.
April Fools.
I just made that whole story up. Trump speaking tonight at 9. Yesterday he alluded to 2 to 3 more weeks to wrap things up. Interestingly, I felt like we got Rubio out yesterday. Did you see his pre-recorded message?
I did not.
Anybody? It's about 2 minutes. He's standing behind a very small desk. It was like an NPR Tiny Desk concert featuring Marco Rubio, in which he talked about just really had to focus on making sure that they didn't get in a position, the Iranians did not get in a position to where they could defend themselves while building a nuclear option. And it felt like a real shift of what the priorities of the war are. Maybe the most positive sign in my mind that this thing is wrapping up was actually his speech, because he clearly shifted the goalpost and was like, and we've done that. So, Ben.
He's back. Fresh haircut.
You just rented a car. What's going on?
Yeah, it's been... So we had
the damage?
The accident,
Okay. I thought you were at the airport renting a car to get here.
Oh, no.
I was like, man, what? Okay.
No, it's, So for those of you who don't know, I got in a car crash a couple weeks ago, and the car's in the shop.
Sorry, I put you on. I thought you were like, took a red eye and were like,
no.
Julia's taking the car home. I'm going to rent one and get up for the call.
No, it's, we got back.
It wouldn't be outside of the realm of things Ben has done.
We got back at a reasonable time last night, like 7:30 or 8 o'clock.
Okay. So all good. Cool.
He's back.
Cool. All right. So we talked about Trump's speech coming up at 9 p.m. tonight. I want to come back. Why don't we jump with your observations from your many conferences?
Yeah. So, I mean,
because you made the rounds. You were New York, then D.C.
Yep. I think Thomas kind of summed up the Sun Belt conference pretty well. I don't know if we had a pockets comment, but that was the only thing I think you might have missed.
Oh, yeah. I mean, in addition to the short executive team agenda, CEO Brendan, big pockets in the hands of the pocket speaker. It was getting a little weird.
Big pocket Brandon.
I was once admonished by Santa Claus at a young age. I was probably 6 or 7.
I've heard this recently.
Yeah, and he told me, as I was getting up, after talking to Santa, he stopped me and told me, get my hands out of my pockets, because if I fell down with my hands in my pockets, I'd break my nose. And I've kept that as part of my security protocol my entire life. So remember that. If you got both hands in your pockets, you're at real risk. We
tend to think of Santa as a giver of physical, material gifts, but really a giver of wisdom.
Yeah. And you forget that in 1995, you could just yell at any child at any point. And as a child, you'd be expected to be yelled at.
He's like, hey, kid.
So, Santa was just like, hey, idiot, get your hands in your pockets. It's like, man, I'm toast. Nothing but coal for me.
And in terms of observations about the city themselves, New York City is really
bustling,
not doing so nice.
Yucky.
Stinky, crowded, rude, very rude.
Yes.
I mean, unbelievably rude.
I don't know if that's new, though.
That's what I was thinking. I don't think that's a novel observation, but it definitely stood out to me. And it was also kind of, I think where maybe we were staying, kind of the area we were staying might not have been the nicest area, but like it wasn't Upper East Side, it wasn't Upper West Side. So I don't know, maybe that had
That
something
just
to do
leaves
with
west and south.
It's relative central.
I don't know my cardinal directions, but I think that you could have been one of the other two quadrants.
And then, but Washington D.C. was very beautiful. I really like Washington D.C. It's really grown on me. I didn't used to love Washington D.C., but I really enjoy it now.
Where the cherry blossoms popping.
They were just coming out when we were there.
Man, that fires me up.
I actually had a really good lunch with an author of a book of which I'm a big fan. He actually had an interesting story about his wife had an interesting story about the book. He said, I said, man, yeah, Mandelbrot and you wrote that Misbehavior of Finance together. And his wife said, no, he wrote it. Mandelbrot can't write. So he was a math guy. But
electric stuff.
He's going to be coming out with a. I think a lot of people talk about fractals in finance, and this.
I sure do.
It's very much.
Tom is not going to let you enjoy this lunch, Ben.
It's very much a marketing gimmick. I mean, I said, is anyone actually using this? And he said, no.
No.
So that was an interesting observation. The other thing in DC was that from the conference, they talked about, is this town operating more different than it has in the past? And they said, not really, because the question was posed, and it was a leading question. Aren't you concerned about, Trump basically giving the memo to all of his cronies about what stocks to buy, and then, doing government handouts? And then they said, well, if that's true, it's always been like that's. It's kind of like it's a town where people know people, and they do deals with other people, and you do deals with people you know.
Yeah.
And so that's how it works.
The idea that there's no front running of trades ever is absurd to me.
To be honest, it doesn't really bother me. I mean, it doesn't move the markets materially. It's just part of the system, and it's not like there's insider. You can have insider information on companies, but I don't think there's actually a law and
against knowing a law that's coming.
Yeah, maybe there should be, but I don't think that's illegal. So
yeah, I don't know that it's illegal for me to if I'm in the cabinet to be like, I know that this policy is a priority for the president, and I also know that the leader of the Senate and the Speaker of the House are on board with it.
I mean, for as much insider trading accusations that get thrown around, the only two people I can think of that have ever gone down for it are Martha Stewart and Phil Mickelson.
Yeah.
And Phil Mickelson was just trying to pay gambling debts.
Yeah.
Notorious. I mean, if everybody's up to no good, it's Phil. But he leans into that, persona of being the bad guy. So, especially recently, not so much like in the early 2000s. He was more of like a doughy dad type.
And now he's made it his point.
KPMG.
Now he's made it his point to be the ultimate foil to Bruce Springsteen.
Yes.
I would say.
Yeah. I hate Scotty Scheffler, which is so strange to me.
Private markets was really interesting. I've always thought that it might be an opportunity in secondaries with all these issues that private credit's having. I thought, hey, the people who actually buy these things from the forced sellers may actually have a good opportunity, but they made a good point. First of all, what I'm saying is not new. And secondly, it's just become a cesspool for people to buy terrible funds. So the GP is still the primary partner and the operating partner of these investments. So the question was posed, well, what are they going to do in the next 5 years that they didn't do in the last 5 years? But I would just warn clients because it's going to be, I'm sure that this is going to be pitched as a hot idea. And you're going to see really, really good returns in year one. And the reason you're going to see really good returns in year one is because you buy it at a discount. But then you immediately, accounting rules mean that you have to mark it to NAV. But NAV is going to be that higher level of NAV that the overall entity is still reporting. And so you might buy it at 80 cents on the dollar and think you got a great deal, and you mark it up to 100 cents a dollar, you're up 25% in year one. But over time, that's going to continue to erode. And when you finally get out of the investment, maybe you'll have got 60 cents on the dollar. So be very careful of secondaries is something I would say that stood out. And then
I would also say, especially in the realm of illiquid securities, the first thing to be sold is the cleanest stuff.
Yep.
I mean, it's just the cleaner it is,
it's easier to sell.
Yeah, because it's easier to sell. And so whatever's left over now is you're just eating out of the garbage.
And you got to be so careful of the vintage too.
Yeah.
Because to your point, because if there's a fund in 2021, I mean, if they made some money, they're out of that thing.
Yeah.
But if they're still in it, it's something they bought in 2021, it's not good.
I mean, you eat out of the garbage. You might be full, but you might also get sick.
And they call it, and they call these things evergreen funds.
Yeah.
Which sounds so nice, but is really not nice.
Green turns brown.
They're like, this is so great that it can go forever.
The other big takeaway, there were a few more, but beyond the scope of this call, but AI, RIAs, everyone's trying to use it, but I mean, no RIA is effectively using it.
Except us.
And we're leaning into it, but one guy was like, yeah, we use ChatGPT. He comes up with some great ideas sometimes. Sometimes I just bounce ideas off of him.
It reads Barron's articles, and then you just say, wow, that's a great idea.
One guy writes his Barron's articles with it.
Yeah.
Ben doesn't even know about the AI I've been doing.
RIAII.
He doesn't even know, man.
And then, but it's a very interesting. I'm actually left a lot more concerned about AI. We have Harrison Pettigrew's really kind of leading the charge here internally on it, and I guess in the last 4 days, Andrew Hall too. So watch out for him.
Yeah. Did any of the RIAs out there, did they mention how they had used this new skill and power to create gambling lines on 7-year-old baseball? Because if not, they're falling behind.
But I mean, I think it's definitely becoming a mandate, and a lot of people don't want to use it or don't know how to use it. Blackstone said that they want that they want their executives of portfolio companies to touch it 30 to 40 times a day. And I'm like, if that's the metric that you're going to have massive unintended consequences of this. And so I think AI is going to be massively used, and we're going to have this Cambrian explosion that can explode in a very good way or a very nuclear way.
And you know who hates mandates? Hixie.
Yeah.
Very vocal about that.
So those were the big headlines.
Woman dates only.
From me.
It was interesting, though, that you mentioned that explosion. I was listening to a podcast with, this is sort of related, but Ben Sass, who I think we've maybe referenced on the call before, but former senator former senator from Nebraska, was the president of the University of Florida, but he has a hyper-aggressive cancer diagnosis, and so he started a podcast called Not Dead Yet, where he just interviews people that he wants to interview and just like tries to learn from them. But he had Chris Pratt on, which seems like a big get for a former senator,
Seattle guy.
But it was interesting. They were talking about technology in general, and I mean the point that Ben made was essentially like the amount of technology, and especially where it's heading, like there's like infinite good that it could do, but the human corruption and fallibility also like means it can be infinite hell. But he made an interesting point just on the technology front. He was like, I spent a lot of time when I was on the Hill with folks in Silicon Valley, and he was like, those folks, if you want to see a model for how your kids should be using technology, look at those guys. He was like, they're building these things that are made to make you addicted and made to give you all these weird social ticks because you're just consumed by screen time. And he's like, none of their kids are on that stuff. But they shouldn't let it happen. So random point of the day. Makes you think.
Yeah, it's fair.
I like it.
Yeah.
What else you got, Ben?
That was mostly it from the conference. Obviously,
how'd your session go?
It went well. It went actually very well. It was. It was a much. I know we've talked about this conference before. I don't know if they massively changed it, Tom. It was a lot better, and I felt like I was not a fish out of water in this one.
Was this a Phil's conference?
This was the Wealth Partnerships, the same one that we went to in Chicago.
Yeah, there's a lady who's on TV. If you watch Bloomberg, she's on about 5 times a week. Her name is Ethan, and she's a big time CIO at a company called Moneta. Man, and she gave us the cold shoulder big time. I tried to play that. My wife is from Ireland, did not play. She was very grumpy, but she's on TV all the time. But I will say that first one, the entire time they talked about the democratization of private credit. I mean, it was the only topic the entire time, and they were wrong. They were completely wrong.
Totally wrong.
Yeah, this one was a lot better. The Henry and Walsh president and I kind of had a little back and forth in our session.
Did you rough him up?
Well, it was interesting. I actually ended up with, because he's on TV all the time, and he was at the Harvard conference that we went to, the time when I spoke at also.
No big deal.
Not brag.
But
he's on the floor above the squash courts.
But he's very well spoken. He doesn't stutter. But I didn't really know how much insight he had, but he was actually kind of listening to what I was saying, which I was appreciative of. And so we had a decent back and forth in terms of just what is actually important, what is important to clients, and how to really elevate that experience. So overall, I thought it was a much better conference than I had anticipated going into it.
Ben, as you get back in the saddle, we're seeing former COVID bubbles popping all over. Restoration hardware down 18%, Nike down 10%. What do you kind of, as you re-enter day-to-day life, what's top of mind?
I mean, I think the private credit thing, I think that might be in like the 7th or 8th inning of the blow up. I think that it's kind of in the ether now. People are scared of it. People aren't really investing in it. Blackstone, Apollo, and Ares are all testifying on the Hill today about it, which usually means that
it's not good.
You're fighting last year's war.
Yeah. I mean, I think we haven't talked about this particular theme in maybe a year, but the end of fiscal candy is over. Mm-hmm. And Restoration Hardware, Nike, home prices, private credit, all I would say are negative externalities of fiscal candy. There's just cash everywhere. Let's spend it. Let's get stuff. And then now that people are having to, the M2 money supply, the amount of money that is flowing through society has been curtailed significantly. Suddenly you're not spending much money on stuff that seems superfluous.
And I mean, I think with both of those examples, I'm sure people will look at Restoration Hardware down 20% and Nike down 10%. And
the earnings weren't bad.
Yeah, and say the economy must be terrible. And I don't think that's the case. I think we're seeing is the final refuse of the COVID easy fiscal candy. Just
Allbirds delisting.
Yeah.
This was a $4 billion market cap company. Their last trade was at 39 mil.
I mean,
they had a place at the Avalon.
It's pretty apropos of, today at preschool, at Easter party for young Hannah. She's going to get some candy. She's going to be hyped until probably about 2 o'clock. And then things are going to feel really rough.
Yep.
Things are going to be tough. Vibes are going to be low. And I think that's what's happening is like we had 4 straight years of fiscal candy. And now the crash is coming, and everyone's like a little irritated, a little jumpy, and it's not fun. It's actually a good example, I think. I
agree.
Yeah.
I mean, you look at it in the jobs market too. I mean, I think the hiring rate is now as low as it's been since. I mean, outside of that, month or two during COVID, since global financial crisis.
Yeah.
I mean, if I ate 4 eggs full of jelly beans, I would be hyped for about an hour, and then I would just want to lie on the floor for the rest of the day.
Bet you won't.
I
don't even think you're man enough.
Jelly beans, I don't know if they're really even that
jelly beans
available anymore.
They kind of stink.
Like the old ones that are like real gritty.
Yeah. It's kind of Starburst jelly beans are bust out there.
Yeah. Reese's Bunnies, Reese's Eggs or whatever. Yeah. Pretty decent. We'll see what comes back.
All right. Well, we'll keep you posted. We'll have a full report on Trump's speech tomorrow. I guess we'll stay up and watch that.
Hey, the market was up 2% yesterday, folks.
Yeah, it's pretty nice.
Bond market was up.
Yeah.
10 years back to a reasonable level. It's going to be a good
down.
week. We have $5 million in bonds maturing today. it was tough scheduling on my point because we have the Jacob's Ladder event today at 12:30. Come on by, high five the boys. Hicks will be handing out his ceremonious hug. You can meet TK for the first time in person, which a lot of people are saying he's the
star of the show,
the hot young thing on the.
You'd always get the new kid in a class, and everybody's just like,
yeah,
really hype you up. Be like, hey, after spring break, there's gonna be a new kid, and everybody's like, you know what? I'm gonna like him.
We used to only have one young blonde in the office.
Yep.
Now we got two. There's a lot of competition.
Yep.
Yeah. A lot of competition between these two.
Yeah. I will say Hicks has been really looking over his shoulder. So he's
standing way too close to TK. Is that what you're saying?
Yeah.
Just like
sniffing.
Perched.
Yeah. He's been sniffing.
He's been looking over TK's shoulder, making sure he's complying.
Yeah. You can't do that.
You got to break these young stallions, you know?
Yeah. All right, on that note, we'll wrap it up. If you are in the area, we'd love to see you today on April 1st at 12:30. Come by, have some lunch, hear about Jacob's Ladder. If not, check out the podcast or go to the jacobsladdergroup.org. Check them out. Talk to you guys soon.